Welcome back. Previously, we were discussing about preparation of non-current accounts and preparation of fund from operation. And today we will discuss how to deal with a fund from operation adjustment whenever you come across a case. Previously, we are discussing how to prepare fund from operation, and there are different methods for methods mean different pattern for computation for fund from operation. The basic concept regarding all these methods is that you need to find out the actual fund from operation of a particular business. And why we are looking for that actual flow of fund means in a business, the profit and loss account statement shows the profit or profitability or profit of the business. That profit consists of earnings or income or expenses of that particular business, in which it contains all the details that are related to business and that are not related to business. That is, the funds that may be directly related to business and that are non-related to business. So those funds that are non-related to business is known as non-operating items. So from net profit you need to adjust non-operating items such as non-operating expenses and non-operating incomes. And how you are going to adjust it? You will just need to add back all the non-operating expenses and you need to deduct all non-operating incomes so that you will get the actual fund from operation. Then only you can find the fund from operation. So previously we were discussing about this statement. Today we will discuss a case that need to find the actual fund from operation. Next case, it is a question in which a profit and loss account is given and you are asked to find the fund from operation. Calculate fund from operation. Usually in essay question, you will be given a two balance sheet and some additional information. In that case, you may not be given a profit and loss account. In that case, you have to prepare fund from operation on the base of additional information and some of the items given in the balance sheet. If you are given a profit and loss account, it is quite easy to find the fund from operation. But unfortunately, in the essay question, you will not be given a profit and loss account. In that case, you will be given only balance sheet. In that situation, you have to prepare non-current accounts. So whenever you are given a profit and loss account, you need not have to prepare any non-current account because all the items are directly given in the question. You just need to identify what all items are non-operating expenses and what all items are non-operating incomes. So as we have told earlier, the fund from operation statements begin with net profit for the year. So if you go through this question, you can see that the net profit given in this case is 1,20,000. See, it is 1,20,000. So before we going into it, first you need to give a heading statement showing funds from operation. Statement showing funds from operation. Sometimes you may come across a question where you have to find only fund from operation. Actually, this is the third step in an essay question. Essay question means the preparation of fund flow statement. In that case, this is third step. Sometimes you come across just to prepare a fund from operation mere on the basis of information regarding a profit and loss account or any additional information. So first heading is statement showing fund from operation. After that, net profit. As I have told earlier, fund from operation statement begins with net profit and net profit is directly given in the question. In this case, profit and loss account is directly given, so it is easy to find net profit. In situations where net profit is not given or a profit or loss account statement is not given, in that case, the computation of net profit during the year is different. I am not mixing that part with this case or a problem. We will discuss that adjustment whenever that type of question comes. So in this case, net profit is directly given. So you need to start with net profit. Next one, you need to add back non-operating expenses. Sometimes we can call it as non-fund expenses, or we can call as non-fund losses. Generally, it is the terms that are given to non-operating expenses. So let's go to the question. So what all items that comes under this heading. So if you go through the question, which side has to be considered for non-operating expenses? We all know this is a profit and loss account. So definitely the left side or the debit side consisting of all expenses. So the non-operating expenses will be in this side. So if you go through this, all these items won't come under the non-operating expenses. You need to go through all the individual items given in the statement. So in this account, you can see that there are number of expenses and which all items are non-operating expenses. Remember, all those items that are non-related to the business or an activity is known as non-operating expenses. Here the first item is salaries. Salaries, it is a one related to the business. That is, it is related to operation. So it's a not a non-operating expense. It's an operating expense. So we will not be taking salaries. Rent, insurance, and tax that are related to the activities of the business. So it is not an operating expenses. Lighting expenses. Lighting expenses, expenses for maintaining the necessary lightings and fittings within the organization. So it is related to operation. So it is an operating expenses. Audit fees. Audit fees means fees given to the certain personnel for carrying out the audit of the accounts of the business that are related to the operations of the business. So it is an operating expenses. Next one, depreciation. Depreciation, we have learned that whatever the activities of the business, whether it is carrying out or not, if there is any fixed asset in the business, definitely depreciation has to be provided. So it is a non-operating expenses have which we have learned while studying about the format for the fund from operation. So first item, depreciation. So depreciation 35,000. Next one, after depreciation, the next item is preliminary expenses written off. Actually, preliminary expenses written off is an item that comes under deferred revenue expenses account, which we have learned while preparation of non-current accounts step. So in that case, we discussed that preliminary expenses is a case that comes under deferred revenue expenses account, and you need to prepare a non-current account depending upon the item. Here it is preliminary expenses account, so you have to prepare account. Means we have learned like that previously. In this case, we are not preparing account. Why? Remember, usually accounts are prepared whenever the opening as well as closing balance of a specific item is given in the question. In this case, you are given a profit and loss account. Whenever a profit and loss account is given, you need not have to prepare accounts because it is easy to find out and identify each item. You just need to add back or less. In the absence of a profit and loss account only, you are preparing non-current accounts. I have told earlier that instead of profit and loss account, you will be given two balance sheets. That is opening a balance or a closing balance of a particular item. In that case, you have to prepare a non-current accounts. In that cases only, you have to prepare non-current accounts. Whenever a profit or loss account is given, you need not have to prepare a non-current account. So here preliminary expenses written off, as we have studied earlier, it is a deferred revenue expenses, you have to prepare account. Since this is a case of a profit and loss account, we are not preparing any non-current accounts. So we are directly taking the amount. I hope you understand the concept. In the question where balance sheet is given, here in that case the opening and closing balance of preliminary expenses are given. So you need to prepare account in order to find this amount. That is the basic concept. So when profit and loss account is given, you need not have to prepare any sort of non-current account. So here preliminary expenses return of 5,000. You just note that item in the statement. So next one, preliminary expenses return off. Next item, loss on sale of investment. We have learned that part. Loss on sale of investment 3,000. 3,000. Just note that amount. Loss on sale of investment 3,000. Next item, provision for tax. If you go to the question, you can see that next item is after loss on sale of investment. Next is selling expenses. Selling expenses is an operating expenses, so you need to have to take in the fund from operation statement. Next is provision for tax, that is 75,000. We all know it's a non-operating expenses and it's a non-operating item. And we learned that while dealing with provision for tax, you need to prepare an account. Okay, we have learned previously you need to prepare account for provision for tax. Why we are not preparing an account here? As I have told earlier regarding the preliminary expenses return of case, here profit and loss account is given. Whenever you come across a question where balance sheets are given, when two balance sheets are given in which provision for tax is given for the first balance sheet as well as second balance sheet, that is opening as well as closing, in that case you have to prepare an account. So whenever you are given a profit and loss account, you need not have to prepare any accounts. So just take the amount that is given in the profit and loss account. So provision for tax is 75,000. So just add all these non-operating expenses, you will get 1,18,000, and just add 1,20,000, this 1,18,000, you will get 2,38,000. Next one is less non-operating incomes. So if you go through the account, you can see that all these items given in the credit side is the non-operating incomes. And remember, all the items may not comes under non-operating income head. Just go through the items given here. First one is gross profit. You need not have to take gross profit, neglect that amount. Next one, interest on investment. Interest on investment is a non-operating income because investment is an extra activity rather than the activities carried out within the business. For example, here this Pearson Limited may be dealing with some sort of business, and the same concern has invested in some other businesses. So income from those investments are not related to the pertaining business. So interest on investment is a non-operating income. So interest on investment. Next item, profit on sale of machinery. It is actually not related to the current business carried out by the same concern. So it's a non-operating income. So note it down. Profit on sale of machinery 20,000. Next item, refund of income tax. This is a case item. You may not come across this item. Quite common in the cases. It's a non-operating income, and so note it down. So refund of tax. So if we add all these three items, you will get 60,000, and you need to deduct the same from the total amount. So you will get 1,78,000. So this is the actual from operation. So just go through it. We will discuss about the further cases in the coming session.